Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 5th of March. All right, now, I guess the big news of the last 24 hours, the Bank of Canada cut rates by 0.5%. I thought they might just go 0.25, but they've followed the Fed very closely and, of course, have signalled that they will do more. Now, this is the joint effort from the G7. Now, obviously, the boys have been on a joint phone call there. Everyone's quite orderly going about their business. The Fed outside of the meeting cut rates, but everyone else is sort of waiting. I would suspect we'll see the same from the Bank of England and a few other central banks. Now, don't expect Bank of Japan, the ECB or Swiss National Bank. I mean, they're all zero or negative anyway, so it's not like they can cut rates and join the party. But the RBNZ, well, I think they'll be clamouring for the scissors as well. Give those interest rates a cut. Now, if we just have a look across the board, otherwise, outside of this coronavirus sort of rubbish, obviously there's talk about the US elections and all this sort of stuff. That doesn't come into play at all, right? It may come into play if Trump wins or if he doesn't, but that's later in the year. All these polling crap and everything else, it doesn't come into the currency movements at all, right? So this is about the coronavirus and about the central banks. And what we're seeing is, and this is where trading gets a little bit tricky, is we're starting to see really weird movements after the central banks have cut rates. Obviously, seeing there the Bank of Canada cutting rates, looking at the major currency pairs. As I said yesterday, most traders at most institutions will be sitting there scratching their head going, what the hell do we do now? Right? The Fed's cut rates, the RBA's cut rates, the Bank of Canada's cut rates. This is not as dramatic as the global financial crisis, sort of 07, 08, 09, but we are starting to see some weird things happening. Now, equity markets, finally, they've kicked into gear. The Dow Jones closing up 4.5%, as did the NASDAQ. So you're going to see sort of decent moves today. I mean, this is a correction from the previous couple of days. Now, the central banks aren't necessarily, they aren't there to try and help people who are trading shares, right? This is about trying to get consumer confidence, everything else going. What has happened to them, and this happened during the global financial crisis, everyone stuck their cash in the equity markets. So now they've got a pseudo problem, which is they're driving the masses towards equity markets where they're getting some sort of yield. And that's going to create bigger issues and bigger problems going forward. If this coronavirus is real and it does continue and gets bigger, well, very shortly, central banks are going to be back at zero interest rates across the board. They lose control of the market, and that's when we're going to see these equity markets take a tumble. All right. So anyway, it's building up into something a little bit weird. If I just give you a look at the charts, you'll see that there hasn't been a hell of a lot of activity. Right. Just starting on the top left there with the Aussie dollar, slowly creeping back to the top side. We've got resistance here on the Aussie and Kiwi. So this, the cut by the Fed hasn't really, like usual normal market conditions, you see Aussie and Kiwi rally 200 points. They have rallied 30 or 40 points, and they are in Dow trends. So that trend is overriding the overall move. Check out dollar yen. You'd think nothing has happened across the board. Euro, looks like there's been some great news in Euro over the last week, but there hasn't been anything in Europe, and that's probably why it's higher. As I said, the interest rates there are at zero, so they're not going to be able to cut rates. Bank of England, sterling, I should say, this 128 sort of 45, 50 level is being a little bit of a pivot point. Once we broke down, it sort of banged away there. Now it's starting to creep higher. I suspect we might see it test 129.30, but I say that with very little confidence. The reason for that is the economic fundamentals that we've been seeing impacting the market, and particularly back into sterling since the whole Brexit thing was done. We're not seeing any consistent movements there now. Like the fundamentals have been pushed aside because of the geopolitical event, and that's what you've got to understand. Trading around these geopolitical events, it's haphazard, right? It's random. Look at dollar CAD. We had that spike higher on the cut and pretty much sort of popped straight back down. So as I said, this isn't normal markets. The central banks are reacting to a geopolitical event, not economics. And that's why we're not seeing a follow through in the actual currencies themselves. So you got to be aware of that. This is where your understanding of the market comes into play and will stop you getting into trades that you might think look good, but they're actually pretty crap. Now, the market conditions, continued poor trading conditions. And this is because we don't know where these events start and finish. The fundamentals, as I said, the economic numbers have been pushed aside, and even the central bank announcements are sort of being slapped around the place. The core market driver, well, it's pretty much the coronavirus. For sterling, we are seeing the UK, EU trade talks. I mean, you won't even see anything about those in the news wires because it's all been taken up by, the US election race or the Democratic race, and also the coronavirus. The active pairs, well, I've lost my little watch list chart, so I've just changed these. It makes sense in this current environment if you're looking for, like anything beyond a few hours of a trading opportunity, there's nothing around, right? These things are sort of whipping about the place and they're waiting. The markets are waiting for random news. So don't get caught up in the opportunities just at the moment. They aren't that good. So to me, all the majors and pretty much everything is on watch, right? That means we're waiting for opportunities, maybe short-term trading opportunities at best, but that's it. Now, coming down to looking at where the next sort of level of activity is going to come from over the next 24 hours, well, we've got two central bankers speaking, right? I'd expect Powell to come out. I mean, Powell has already come out and been dovish. As I say, the Bank of England Governor Carney, you'd expect him to be quite dovish following suit here with the central banks. Obviously, the RBA cut by 0.25, the Fed 0.5, and the Bank of Canada 0.5. You'd expect this whole column to be full of central banks cutting rates, or the ones that do have rates to cut anyway. So what do we do? I mean, this is the hard part, right? You come back and you look at the economic numbers and you think, well, where are the potential opportunities going to come from? Well, we do have some US numbers coming out. You know what? I can't see these really coming into play at this point. We've got the non-farm payrolls Friday. Now, this is a huge number. We could see some really wild volatility on this if we get some decent variance. And that's primarily because, it's a big number that the central bank's looking at. Of course, right now they're focusing on the coronavirus, but core economics, we've got the Bank of Canada or Canadian employment numbers, US employment numbers. That's what the market usually would be focusing on very heavily. Keep an eye on the Aussie retail sales figures Friday, but today, I tell you what, it's a bit of a tough call when we do have, a lot of weird things happening. If I just come back and just give you a look at the risk on, risk off page, I mean, this is where a lot of activity, especially around geopolitical events, comes into play. You want to be keeping a close eye on this. The whole risk on profile, is this a risk on profile? Well, check out the sort of risk pairs. They aren't reacting like it's risk on, right? This move in the Dow is, so we're seeing a bit of a decoupling here of the risk on, risk off profile. And that's what this page does for you. It gives you a very clear indication just because it's color coded, red being down, green up. US equities green, you would expect all the yen crosses in particular to be green, and they're not. So just be aware of that. Of course, the Asian equities are going up. It's tricky as hell is what I'm trying to get to. The gold sort of up slightly. So to me, the market is starting to lose interest. They are starting to trying to work out what the central banks are actually trying to achieve. Okay. And we need a couple of days for this to settle in. Now, when you do come back and start to look for the numbers to sort of have a look around, as I said, don't forget the Bank of England governor speaking, as is the Bank of Canada governor. So just keep an eye on those two things. They should be very direct and very dovish. And then we got these US numbers, which I don't think are really going to impact at this stage. So hard trading conditions. Just keep it real. If you are trading, decrease your trade size. Stay in the game. Give yourself a chance to keep these positions alive because there's a lot of fickle moves at the moment. All right, and you want to keep an eye on those US equities. That's where the core direction for me is coming from at the moment. All right, guys, have a good one. Cheerio.